Hello, everyone. I'm Jennifer Durishin from Prodigal, and today we're going to be unpacking the latest credit card trends and outlook for 2024. I'm joined with Anand Joshi, former VP of Global Collections at American Express. Thanks, Anand, for being here today.
Thanks, Jennifer. Thanks for inviting me.
Yeah, well, let's jump right into it. There's lots of things for us to talk through here. So, hot off the presses from Q4 2023 earnings reports, tell us what's the current state of the credit card market and maybe some of those key trends.
So the credit card market is doing very, very well. And if you look at actually I looked at some of the major issuers if you look at top 7 issuers, they control pretty much 80% of the market or even higher at times. They have seen a robust growth in terms of receivables. So there is a robust consumer spending happening out there. As you all know, economy is doing quite well as a whole and driven by consumer spending. That growth in consumer spending is also driving growth in credit card receivables because people are actually borrowing money on their credit cards to spend it. So all the issuers have seen a very healthy growth. And especially if I look at prime, super prime segments versus even subprime segments, they both have seen very strong growth. They have surpassed the pre-pandemic highs of receivables more on the prime, super prime side than on the subprime side, actually. So the growth on the prime, super prime side is almost twice as much compared to subprime lenders. So that's pretty interesting and that's pretty good. So from that angle, the industry is doing quite well. The second aspect of it is on the write-off side. So as the COVID hit and both Federal Reserve and the federal government took very quick and strong actions against it in terms of helping out consumers through distribution of actual monies. That lowered write-off rates tremendously. In fact, the industry saw a very sharp drop in the write-off rates. They started to come back up, and most of the industry would say, they are starting to normalize it. So, having said that, in the Q4 of last year, when earnings were published, you will see that many of the issuers, not all, but many of the top issuers now have seen the write-off rates either about the level of pre-pandemic highs, or even some of them even have surpassed it. At the segment level, again, if I look at prime, super prime, and subprime, they both have surpassed the pre-pandemic levels of write-off rates, and even I'm sure even on the delinquency side as well. So things have normalized from that angle. Given the rise in credit card receivables side, the overall write-off volume, the dollar volume of that goes into write-off, has more than doubled in 23 compared to 22. So pretty sharp rise. It will be interesting to watch what happens in 2024.
Yeah. Well, you keep going. Sorry about that.
The trends are, and actually some of the banks have been quite forthright about their outlook for 24. Not everyone hasn't shared their outlook in detail for 24, but some of them did. So based on the trends we've been observing and some of the outlook that is shared by some of the big banks, I would say at least expect 30 to 40% rise in write-off volumes in 24 over 23. So some of the actually banks are saying the second half of 24 things are going to subside. Not subside meaning not come down, but at least flatten out in terms of write-off dollars, given the soft landing that is likely to occur.
Okay.
Which may happen. I mean, I think it looks like that's the strongest likelihood, most likely scenario at this point in time. Having said that, the interest rates have risen a lot, and that has caused the minimum due on the credit cards to go up, which have contributed to the sharp rise in delinquency rates and write-off rates. And the student loan repayment has started again as well. So that is also contributing to that. The question is, how do all these factors come together, and what do we see in 24? Right? I mean, that's a big question. Uh, at least I think you will definitely likely to see 30 to 40% rise. Credit card receivables growth may not continue at the same pace as 23, but it will still probably, if the consumer spending remains good and soft landing does happen, it will continue to grow.
Okay.
Uh,
Well,
so
you,
there are different factors in play, and the question is how they're going to work out and pan out in 24. We can take a guess, but it's only going to be a guess.
yeah, you definitely packed a lot in there. So we talked about the growth in receivables, consumer spending continues to grow. And then we've also seen receivables hitting those pre-pandemic levels and equally a significant increase in those write-off rates. So do you want to talk a little bit more about what's driving those shifts? You mentioned a couple things. Anything else to add there?
Well, I think the factors at the higher level, the factors I mentioned are a robust consumer spending as one. Second is on the flip side of it, the repayment of student loans and how that is going to impact somebody's ability to pay all their debts is a big one.
Mm-hmm.
Third, the rise in interest rates. So what the way it happens is the Federal Reserve raises the interest rates. That has an impact on the prime rate, and the prime, and a lot of credit card APRs are tied to prime plus something. These are called variable rates, and bulk of the industry actually works on that versus giving a fixed rate to consumers, because that way protect their balance sheet and their P&L as well. So the interest on credit card receivables have grown a lot. I think what I last read was average credit card interest now is around somewhere around 20-21%, which is
Wow.
pretty high.
Yeah.
This is without being in delinquent status. If you go into delinquent status, your interest might be reaching even significantly higher, high 20s, or even somebody touching probably 30%. That's huge. So given this, the minimum due goes up, because in a minimum due calculation, you have to pay back the interest and fees accrued in that month, plus some portion of 1% of your principal. So if the interest rate goes up, your interest amount goes up, your minimum due goes up, and that puts pressure on people who are sitting on the margins. And that's where the delinquency and write-off rates begin to get impacted.
Yeah. And
so that's a dynamic which is sort of out there. And just want to be cognizant of it.
Yeah.
Having said that, the one big factor hasn't moved much is the unemployment rate. I think a lot of economists predicted last year we will see a big rise in unemployment rate. That did not happen at all. It's still at the historic lows. If that begins to move for some reason, that will be another factor that can come into play. But I would say so far so good.
Yeah. And so even with consumers that have some of these high interest rates, it's likely that they probably have more than one credit card that they're trying to pay off. So they're just underwater. But prime rate more than doubled from 3.5 to 8.5%. Is that right?
Yeah.
Yeah.
I mean, that's the prime rate that is out there right now.
Okay.
But credit card interest rates are far higher than prime rates.
Yes.
For most of the people.
Right. For that margin. And then, yeah, we don't really have a lot of data around resumption of student loans since last October, but that's certainly a factor. More payments that people need to make. So pretty big deal for sure. So let's talk about more of the doubling of the write-off dollars from end of year 2022 to end of 2023 is just striking. What's you want us to talk more about what's behind the surge and importantly the implications?
Right. I think if you look at so again, there are two factors, right? One is the receivable growth.
Mm-hmm.
Second is the write-off rate growth, meaning the increase in write-off rate. And you combine, and they have like a multiplicative effect. So you multiply the two and you get a total dollar volume growth in write-off buckets. So they have both grown, and especially the Q4 of 23, most of the banks have seen a pretty big rise in write-off rates from Q3. on a quarter-over-quarter basis. That has pushed them over the pre-pandemic highs, or just about. And if they haven't exceeded that in Q4, they will probably exceed that in either Q1 or Q2.
Wow.
No doubt about it.
Yeah.
Because the delinquency dollars that are sitting there, which will eventually write off, they also grew a lot in Q4. So they are going to have an impact on Q1 or in Q2 write-off rates.
Right.
Question is, what is going to happen in the back half of the year?
Mm-hmm.
That there could be other factors playing about how that shapes up. But first half of the year is pretty well understood that you will see further rise in write-off dollars, write-off rates.
Yeah.
On
Those
the
numbers are huge. I think I see fiscal year end of 2022 write-offs were 14 million, and then they almost billion. Yes.
Billion.
And then they doubled to almost 30 billion.
Yeah.
And then you're saying for 2024, they're expected to rise another 30 to 40% in the first half.
Yeah, so that could be another $9 to $12 billion. Again, I'm talking about only these 7 top issuers, right? I think but they do control 80% of the market share.
That's a pretty big chunk.
Yes, and by the way, their write-off rates overall tend to be better than the rest of the industry. Because they are the big ones, they have the scale, they have far better capabilities to manage the revenue growth as well as manage the write-off dollars and delinquency dollars. So the rest of the industry, which is very fragmented, there are actually hundreds of them or even thousands of them who have the rest of the 20% market share. They are not as well equipped. So in general, these 7 actually perform better than the rest.
Wow.
So you can imagine what happens on the rest of the side.
Yes. Yeah. And did this include, we know the news with Capital One and Discover too. This analysis didn't include them, or it did?
It did, actually. Both are part of it. They're both top 7. They are both and now we are going to have maybe only top 6.
Right.
If the merger goes through, right?
Yeah, they'll be number 1. Is that right?
Cap One will become number 1 by a big margin over JPMC if that merger goes through. So yeah, it is going to create a huge player in the credit card industry if the merger happens.
Yeah. Well, you also touched on rising prime and super prime rates affecting delinquency. Do you want to talk a little bit more about that and what it means for consumers?
Yeah. So typically, the prime super prime is a segment where the industry defines it as if FICO score is more than 660, you're considered prime. So there are about 3 or 4 big players who predominantly focus on the prime super prime segment. Like, for example, JP Morgan, American Express, and there are a few more, right? So I think the percent growth in write-off rate for the prime super prime was higher. Their write-off rate is still much lower than subprime lenders.
Right.
I think you will see a big difference, but at the same time, the percent growth of write-off dollars and the rate for prime super prime was actually higher than subprime, which is another factor. So essentially, it is not just the subprime buyer debtors who are getting impacted through these conditions, but even the prime super prime have seen the impact. The normalization is happening on that front as well.
Wow.
And I think that's where the watchouts are going to be there. I mean, again, there is no certainties about what's going to happen, but at the same time, given the trends, I think seeing further growth in 24 is a very likely scenario.
Yeah, and so I see it was $7 billion at the end of 2022 write-offs for prime and super prime, and then it doubled to 15. So yeah, 106% growth, which is unheard of. Usually we talk about the subprime market, but the fact that it's impacting these groups, quite a big deal there. So yeah.
Absolutely.
Last topic is just, you had mentioned it, but I want to dive into it a little bit more, is just looking at return of student loan payments and potential changes in unemployment rates. Want to talk a little bit more about how you think they'll shape the landscape in 2024 and what we might expect?
Sure. Actually, student loan is an interesting factor. It has started. The repayment has started. Having said that, there are also some caveats around it. Meaning, even if for some reason you are not being able to pay, you are still not being reported to the credit bureau.
Hmm.
So there are no sort of consequences of not paying. At least they are not going to take effect about a year from the start of the repayment program. So around Q4 of 24,
Okay,
they
October.
might start reporting back. So the consequences might be felt then. So I think that's why I think it's an interesting factor to watch how that shapes the behavior of uh, student loan holders.
Yeah, you had mentioned a potential soft landing too, maybe mid 2024. Talk a little bit more about why you think that's likely or possible.
I mean, those are I'm by no means I'm an economist, but at the
Right,
same
right.
time, a lot of
Yeah.
economic. I mean, again, a lot of economists had predicted a potential recession in 23, which never happened. So economic forecasts are always come with a lot of uncertainties.
Yeah.
But having
Yeah.
said that, the way the current things are running, economy is doing well, consumer spending is great, unemployment rate remains pretty low. Given that, and inflation has subsided, it is not there at the level of what Federal Reserve would like to see, but it has subsided. So the likely scenario most of the folks are out there, or the commentators out there are saying is, hey, the soft landing is a very likely scenario. Soft landing essentially means inflation subsides and economy remains good.
Okay. That would be
Uh,
good.
but if the economy doesn't remain good, or economy begins to deteriorate or
Mhm.
decline or soften up, and the inflation doesn't subside, then it's a different story.
Yeah, it'd be great to
So
see some offset on some of these other these other points that you made earlier. So
yeah.
yeah, we'll see. Well, we're going to be keeping a close eye on this. We're going to be keeping a close eye on Capital One, Discover News, and see how that pushes through. Anything else you want to add?
No, I think, as I said, it will be interesting to watch what happens in 24. Uh, I was part of credit card industry for a very long period of time, so always an interesting dynamic here.
Yeah, for sure. Lots going on. Well, thanks. Hey, really appreciate your insights. This is very timely. Thanks everyone for listening, and we'll be back with more of these if you like them. So let us know. Thank you.
Yeah, thank you, Jennifer.